Right, stop what you're doing, because on Thursday the 30th of April, something's happening that could genuinely affect your mortgage. The Bank of England's Monetary Policy Committee, the MPC, is meeting. And before you switch off thinking, oh, here we go, another economics lesson, stick with me, because this one is really important. So here's where we are at the moment. The base rate is currently sitting at 3.75%. It's come down from a painful 5.25% back in August 2024, which, let's be honest, was not a great time to be a mortgage holder. Since then, we've had cut after cut after cut, 6 cuts in total, and earlier this year, a lot of economists were expecting more cuts in 2026. 2 more, in fact, possibly in April and then again in July. We were on the glide path. Things were looking up, and then this Middle East conflict happened. Energy prices spiked. Inflation, which had been falling nicely to around 3%, is now expected to nudge back up to around 3 or 3.5% over the next couple of quarters. And that changes the game, because the Bank of England's job is to keep inflation at 2%. So when inflation goes up, they do not cut rates, they hold them, or in really bad scenarios, they start to raise them again. So what is actually going to happen on the 30th? Well, according to 62 economists polled by Reuters in the last few days, the most likely outcome is a hold. Nobody's expecting a cut right now, and in fact, some economists are starting to talk about the possibility of a rate rise later this year, if energy prices stay high. The National Institute of Economic and Social Research has modelled a scenario where rates could climb back to 4.5% if the energy shock lasts a full year. Now, before you panic, this is a worst-case scenario, not a done deal. But it does mean the window for cheap money is not as wide open as it looked back in January. So what does it mean for you? If you're on a tracker mortgage, your rate follows the base rate directly. A hold means nothing changes for you right now. If you're on a fixed rate deal, you're protected. But if your fix is ending this year, now is absolutely the time to have a conversation, because fixed rates have already crept up in recent weeks as lenders have reacted to inflation news. Although we have seen a few cuts creeping back in from certain lenders. And here's the bit I really want you to hear. If you're sitting on your lender's standard variable rate, you are almost certainly paying way too much. We're talking average SVRs at around 7%. There are deals out there significantly below that. Do not wait for the MPC to save you. That's my job. Whether it's a hold, a cut, or a rise on Thursday, the right mortgage deal for you exists right now. Drop me a message, hit the link in my bio, and let's get a proper look at where you are and where you could be. I'm Patrick Weightman, your local East Midlands mortgage and protection advisor, serving clients up and down the UK. Drop me a like and a follow for more, and hit the links in the bio to get in touch. Speak to you soon. Bye-bye.